The organized retail sector, especially hypermarkets and supermarkets, are in the midst of an overhaul and have entered consolidation mode. Across the country, companies like the Future Group, Reliance Retail and Aditya Birla Retail have all tweaked their strategies to reduce costs and ensure a renewed focus on profitability. So from leaner models to fewer format stores and smaller shops, these retail chains are rewriting the rules and reversing the formula they've been using so far. So what has prompted this move and how does the future landscape of modern retail look in India? Tara Kapoor attempts to answer this one.
Evolution. Webster's dictionary defines the word as a process of gradual progressive change. We've seen the concept of beauty evolve over the years, from the buxom beauties in the 1960s and 70s to the size zero phenomenon that's in vogue today. And if there's one thing that can be learned from the fashion world, it's that thin is in. And one business that is now slimming down its structure are the supermarkets and hypermarkets in India. Once touted as the next big revolution in India, the joyride for modern retail seems to have come to a standstill. All the major retail conglomerates in India seem to be going through a consolidation and are pulling all stops to ensure a leaner, meaner and more importantly, a profitable model.
In terms of consolidation, I guess it's also a process of evolution. I don't think it's just about closing stores. It's also about making sure that you relocate stores. It's about shifting from lower consumption areas to higher consumption areas. It's about moving from older markets to newer markets. So there are several things that kind of determine why consumers, why retailers relocate, rationalize, close stores, etc.
From the euphoria of 2006, I would say we are at a stage where I would call it a stage of cautious optimism. The last half of 2011, I would particularly see the period post Diwali, which is early November, has seen a very significant slowdown in the retail growth, even in the food and grocery segment.
But what has really caused this space that was cruising in the fast lane to hit a roadblock? The need of the hour for organized retailers is now to increase its profitability for every square foot of store space. As a result, Aditya Birla Retail plans to down the shutters on around 10% of its more outlets in the country.
The whole focus for retailers would be now in getting profitability right, and to take a couple of years for them to get that right. And then in terms of new investments and aggressive investments, I think until and unless funding becomes far more easier than what it is today, until such time as we have a visibility on FDI and multi-brand retail, you're not going to see huge mega bucks being invested in this sector.
And they're not the only ones. Reliance Retail has decided to reduce their number of formats, which varied from hypermarkets to specialty stores. Not only that, the company plans to shrink the size of its new hypermarket stores by a whopping 60%.
Well, I think at Reliance Retail have a fair number of formats. At this point of time, we have 22 different formats. And I guess, we've learned the lessons early. Pressures are there because, if you really look at it from a consumption side, all of the modern retailers need to actually ensure that we increase our sales per square foot, which is a very critical determinant of the potential of the location, and rent is a very important driver of cost. So making sure that we actually are in the right locations in terms of both size and catchment and cost. So that's the other thing that all of us do.
The language of the retailers will change and they will talk like the retailers globally, because most of the retailers globally have realized that they've already saturated the market. They've been talking about how do they increase the business per store, and they're not talking about just expanding geographically. And I think the Indian retailers will talk that language now.
In fact, high rentals is one of the main challenges faced by most retailers, especially in the metros. Just to put things into perspective, Industry experts say that retailers need to spend the profit of 8 to 12 existing stores to set up a single new store. And given the fact that the cost of real estate in India is among the highest in the world, many a time retailers end up being short-sighted. In fact, almost 15 to 20% of the time, the location of the store doesn't work for the company.
If you look at some of the infrastructure which is required for some of the larger formats to work, whether it is in terms of cars, whether it is in terms of public transport, whether it is in terms of parking, that is absent, and therefore the ability for people to go to the outskirts of the city, which has happened in many other markets, is something which has not happened in India.
And not only are these retail giants experimenting with their current models, they're also effecting changes in their management teams. Case in point would be Future Group, where Rakesh Bayani took over as Joint Managing Director of the retail business after a restructuring exercise that saw the departure of Sanjeev Agarwal, Joint CEO of Big Bazaar. The story is similar in Aditya Birla Group, where senior management was juggled around earlier in March.
There are some retailers in India who have changed entire top management teams several times in the last few years. The purpose behind change is because the need of the business changes. Sometimes it's a turnaround, sometimes it's changing track completely, sometimes it may be a focus on profitability. So that's the reason why you see so many changes. Then sometimes just sheer pressure of performance on the businesses. Ultimately it's restlessness with investments that have been made which are not yet yielding returns.
Many of the retail business houses, when they started off with having what I would call as a heavier management structure at the top. And now they know the business, they know that most part of retail can be done from a process angle. So they don't need so many heads to be sitting in the retail business. So they are also consolidating what I would call as the top of the pyramid.
The big question that arises, however, is what will this slowdown in the retail segment do to the growth rate of modern trade in India, which has been growing steadily at around 20 to 25%. And while most believe that the retail sector as a whole should still be able to maintain that growth rate, the section that will bear the brunt will be the supermarket and hypermarket segment.
I think in the food and grocery side, there is going to be challenge. Maybe some part of this growth will just come through inflation, but if I leave the inflation out, I think getting a 25% growth in the food and grocery segment will be a challenge. So I think what is going to be a game changer in this sector is if people are able to do the backward linkage, improve the supply chain and pass on the benefits of not only the cheaper price but also of fresher, better produce. That's when the consumers will start flocking towards modern retail.
While some dismiss the trend as just another stage in the evolution of modern retail in the country, others say that more fundamental problems such as regulation and real estate have caused the roadblock. But one thing that's clear is that organized retailers need to be much more creative with their models in the Indian market. Case in point would be Walmart, who has dealt with the economic challenges of real estate by looking at smaller towns and focusing there. And this model might prove to be a profitable one for the global giant, given the fact that to win in India, unlike other global markets, you need to win in a much more dispersed environment.
On that note, it's time for us to get commercial, but coming up